Hey everyone, welcome back to Corporate Decoder. Today we're diving into Quest Resource Holding Corporation's latest filing, and it looks like they might have just pulled off a financial magic trick, or maybe they just sold some stuff. We are going to find out. Quest Resource Holding Corporation just filed a report called an 8K, which is like a quick update they send to the SEC, the government agency that watches over companies when big stuff happens. This one is all about them selling off a part of their business. Let's break down what this means. The main headline is that Quest Resource Management Group, which is like a smaller piece of Quest Resource Holding, sold a bunch of its stuff, all the assets, to Lincoln Waste Solutions. Think of it like selling your old car and all its spare parts. So, how much did they get for selling all these assets? Well, the deal says Lincoln Waste Solutions needs to pay Quest Resource in a few different ways. First, they got about $5 million in cash right away. That's a good chunk of change to start with, but there's more to come. On top of the initial payment, Quest could get up to another $6.5 million, but this depends on how well the contracts they sold perform over the next 3 years. It's like saying, if you make a lot of money using what we sold you, you owe us more money. There's also a one-time payment based on how much Lincoln Waste Solutions can collect from old bills that were due to Quest. Think of it as chasing down old IOUs after you sell something, but there's also a catch. They can take away some money from these future payments if things don't go as planned. Now, what's really interesting is that Quest had to talk to their lenders, the banks they borrowed money from because of this sale. They have deals with Monroe Capital and PNC Bank. Selling off a big part of your company can mess with those deals, so they needed to get permission and change some of the rules. They made a deal with Monroe Capital to change their loan agreement. One of the changes was to how they calculate total senior debt. That's basically all the money they owe that has to be paid back first. It sounds like selling these assets helped them change that number for the better. If you want all the nitty-gritty details, you can check out Exhibit 10.2 in the report. It has all the specifics of the deal with Monroe Capital. They did the same thing with PNC Bank. They changed their loan agreement too, and the change was pretty similar to what they did with Monroe Capital. It also involved changing how total senior debt is calculated. Again, if you want all the legal details, Exhibit 1033 has everything you need to know about the PNC Bank deal. So why did Quest do all of this? Why sell off these assets? Well, companies do this kind of thing for a lot of reasons. Maybe they needed cash, or maybe they thought that part of the business wasn't doing so well. Sometimes it's just about focusing on what you're really good at. Quest also put out a press release, which is like a news announcement to tell everyone about this deal. You can find that in Exhibit 99.1. It probably spins the story in the best possible way for Quest, so it's always good to take it with a grain of salt. Alright, so what does all of this mean for Quest Resource Holding Corporation? Well, it looks like they're trying to simplify their business by selling off some parts. This could be a good thing if it helps them focus on their core strengths and pay off some debt, but it also means they're giving up some potential future income till we see the next time they file a report if it was worth it. Ultimately, this move signals a shift in Quest's strategy. Whether it leads to long-term success remains to be seen, but for now it's a clear indication that they're willing to make big changes to stay competitive. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, give us a like, drop a comment, and subscribe for more insights into the world of corporate filings. Until next time.